Hello and a happy new year. I'm Richard Hunter, Head of Markets, and welcome to our first look ahead for the week commencing the 11th of January. It's been a fairly perky start to the year. In the US, the so-called blue sweep has left investors taking the positive angle on the basis that it's likely we'll see more infrastructure spending and also a further fiscal stimulus, and that's offsetting the fact that there could be higher taxes and more regulation, especially on tech. The UK, meanwhile, has had a very strong start to the year. Some indications that perhaps at last an index which had been shunned for so long is starting to appeal to some value-seeking investors. Certainly a very sprightly start to the week, and that's despite ongoing strength in sterling, let alone, of course, the pandemic with which the whole world is having to contend at the moment. So in the first few days of trading, the Dow Jones is up around 1.4%. That's building on the 2020 rise of just over 7%. S&P 500 also up about 1.3%. That was up 16% last year. And the Nasdaq is up 1.4% also. That's on top of last year's 44% gain. FTSE 100 in those first few trading days, as I say, had a pretty good start, up around 6%. And we'll see whether that momentum can continue into next week. Fairly busy corporate calendar, as you would expect, having just been through the Christmas and New Year period. A couple of stocks to look out for. First one, JD Sports Fashion has a trading statement. Its online position has been one that's been fairly strong. It's also a reasonably trendy stock, particularly in terms of its trainer lines, which have gone down very well. It's also got a diverse geographical spread, which has helped it, and it's got a fairly healthy net cash position. Unfortunately, what has kind of held the shares back is the overarching implications of Brexit as well as the pandemic. Shares are up around 3% or so over the last year. Also getting a trading update from Persimmon, the house builder. If it's anything like Barratt Development's trading update this week, it's likely to be a strong one. The shares yield around 4%, so there's something there for income-seeking investors. And of course, it's been benefiting from the tailwinds of the stamp duty holiday, mortgage availability, low interest rates, and indeed the Help to Buy scheme. And finally, an update is also expected from Tesco. Again, if the updates from Sainsbury and William Morrison this week are anything to go by, it should have benefited from a very strong trading period, particularly in the online and convenience store format outlets. On top of that, of course, its acquisition of Booker is continuing to very much reap rewards, and in the meantime, shares are also yielding around 4%, a clear attraction for income-seeking investors. Thank you for watching. Have a great week.